Gold may be getting ready for a breakout, says Kitco Metals Global Trading Director Peter Hug. He joins us today. Thanks, Peter, for being back with us on Kitco's Gold Report.
It's nice to be here again, Daniela.
Well, Peter, you say that a passive Fed, lower oil, and continued flux in the global equity markets continue to be price supportive for gold here. We're currently above the 1110 level now. What is your key target, Peter?
I'd like to see gold get through the 1122 target. I don't think we'll see it today, but 1122 I think has created some resistance. And if we can get through 22, unfortunately, there's going to be a couple of ladders here. I'd then like to see it get through 29 and then 1132, and then I think we could have some wind behind the sails here in the gold market.
So what's it going to take to get to 1122? Just stay on course as is right now?
Well, I don't think the Fed, we've had a major move again in oil this morning. There's a rumor out that OPEC and non-OPEC countries are going to get together to try to resolve this supply issue. I don't think they'll be successful. But, I think gold moves either way here. If you have oil collapsing and the equity markets collapsing, I think gold picks up a safe haven bid, and you're going to get buying into gold for that reason. If you don't have a collapse in oil or a collapse in the equity markets, you can then make the case that maybe the economy is on the mend, and with higher oil prices, you can then factor in potentially inflation creeping back into the picture, which again is also supportive to gold prices. I do not think the Fed under either scenario raises rates, probably at least until June. So you've got an easy Fed with either condition, inflationary conditions or a deflationary condition, potentially being price positive for gold. It's very unusual, but I think gold is going to catch that bid.
Well, investors obviously seem to like gold, but the metal is still underinvested by funds. So what needs to happen for fund managers to fully jump on the gold bandwagon again?
It'll be a technical trade for fund managers. Once it starts getting through some technical levels, they're going to want to allocate some of their capital to metals. Certainly, the selling in all of the funds has abated dramatically. There's been some recent buying in the silver ETFs, and certainly the gold ETFs are starting to pick up on the demand side. And we're seeing good physical demand here from investors. They're now actually feeling a bit more comfortable buying into this market and not feeling that they're going to get whipsawed. So we start getting this demand picture coming in. India is also up some 7% on their imports with their current festival season. And Chinese imports in the Hong Kong market are up about 6% from the same period last year. So we're seeing good global demand as well. I mean, this could start to catch. And once the technicals break, and I think that's a lot to do with why the market is being a little subdued here and a little sideways. But once we get some technical confirmation, I think the fund managers come in and they start to aggressively add to positions.
Peter, thanks so much for your thoughts today.
You're welcome, Daniela.
And thanks for watching this edition of Kitco's Gold Report. We'll see you tomorrow.